Hi everyone and welcome to Trades of the Week, and today we have some really exciting topics for you. We're gonna be speaking about what exchanges are crashing around the world, so where do you need to withdraw your money from? We're gonna talk about a fund that could buy the entire crypto market with just investing 0.3%. So what is the doom and gloom, or will the market go up in the shorter to medium term? Well, in this episode of Trades of the Week, you will find out. Now, in regards of the Trades of the Week, before we start, if you enjoy these videos, make sure you press that subscribe button, and don't forget also to comment below what are you enjoying the most about these videos that we're posting, and also what would you like to see? Would you like to see anything specific? Let us know. So with that being said, let's dive into it. So the first thing I wanted us to have a look at is the previous week's buffaloes and what have happened since last time. And now what you can see in the middle is a watermark where you can see the ticker. So if you're ever wondering what ticker we're looking at, well, there it is right in the middle. So the first one I want to look at is AB. This is Alliance Bernstein Holding, and we have locked in a 2% profit. So that's a moo. I need to practice my moos. I know that it's not as good as Keith's or Marcus, but I'll get there. It's a Swedish cow. So 2% profit there, which is awesome to see. The same with IRM or Iron Mountain Incorporated. Same there. We closed in 2%. Like, well, Dennis, what if it goes down more? What if it carries on down? Well, it doesn't matter. We're sticking to our strategy. And the strategy, write this down if you haven't, the two golden rules that we need to do with all trading and investing is let your profits run and cut your losses short. And another rule I'm sticking by is never turn a winning trade into a losing trade. Because we don't know and did not know how this was going to go when we were in it. So that's why it's so important to make sure that you stick to the rules that you set out for yourself. And in that, no emotions. Very important. No emotions when you're trading and investing. So that's 4%. That's another moo. Another moo there, which is awesome. So with OXY, we're around break even. We got into this, which is great news. And then what we needed to do here was, since we looked at this, it actually never went into our entry. So that's a no trade on this, right? So this is a no trade since it went below our stop loss before it entered us in. So last week we were at this point. So then it, instead of going up and taking us in, because remember, if you're new to the channel, we always enter with a stop order. What is a stop order? Well, a stop order means it needs to go in our direction before we enter. That's what this is all about. So therefore, it didn't take us in, it went down instead. Would have taken you out if you would have entered, but since we didn't, this is a no trade for us. And looking at Sequoia, the same thing. There's a no trade either. We hoped this was go down, but no, it went the other direction and broke to the upside. The same there. This is the power of the stop order. That's what it's called. So before we head into the new ones, there are a couple of pieces of news that I want to share with you as well. The world is actually might be in a better place, at least in the shorter to medium term. Now, what's happening last week, since we got this huge rally, as you can see in front of you in the market, I'm going to just have a short look at the Dow Jones as well. So last week we saw this big candle to the upside on the 6th of January, and also what happened was we got some numbers, some very good key metrics. Well, it was not really good news, but the market interpreted in a good way, and therefore the market went higher. So basically, we got higher prices in equities, but it might be short-lived. We might see this rally that we're seeing just in the shorter term. We'll see how it plays out over the next couple of weeks. But basically, we got the numbers for wages, and the wages were growing. It showed actually the wage growth showed a deceleration, which actually meant that they didn't grow as much as earlier. And the market is a speculations market. That's what we call it. It's not really driven by news, more of emotions by investors and traders, at least in the shorter term. So it looked like positive news that Fed's strategy it's starting to work. Their strategy to decelerate the economy is starting to work. But now this week, we're going to get the inflation numbers. So that will give us kind of a good sense of how much they're looking to raise the rates, if they're going to keep going with what they want to, or if they're going to slow down. Because everything that is happening is pointing towards, well, at least in the speculator's mind, that the Fed will pivot eventually. And what that basically means is that they're going to stop raising interest rates. Now they're going to flatten it out, and then maybe they're going to start lowering it again. But we are starting to see a deceleration in the economy. And one metric, especially if you're new to this, is DXY, the US dollar currency index. Now, it's not really measured against the US stock market. It's more measured against different kinds of currency. It's more a currency basket. But what we've seen historically, if the dollar index goes down, then the currencies, but also equities such as Bitcoin, gold, silver, even the stock market goes up. So currently what we're seeing in this market is lower highs and lower lows. We tried to break higher here but failed, and now we create a lower low. So as long as this pattern continues, we will probably and very likely see a continuation in a bullish trend in the market. Now, this can change at every time, which is why we are hedged. But I believe, and also historically, it's worth mentioning that usually after a crash that we had last year, we actually see a recovery of more than 10% all across the board in the equity market, like the Dow Jones, the 30 biggest companies in the US 100, the tech stocks across the board. We usually see an increase of 10% or more. So that is the probabilities what they are like. But in the shorter term, no one knows, which is why we're always hedged when we are trading and investing. So one company we're looking at the moment is GPC. So with GPC, we had a move up yesterday. So I'm not yet in. We were very close. If I zoom in, you can see here that we were very close of getting in here, but we actually didn't, just by a small margin. So you can still get in, and you can still place the order, of course, and we have a nice 3-to-1 reward risk ratio on this. And what I really like about this is that we have higher highs and higher lows. So now the probabilities are we're going to head up once again. We'll see how those probabilities plays out. And the ticker is Geronimo, Paprika, and Cucumber. And some people will not be happy with that. And the other one I'm looking at is HE, Hawaiian Electric Industries. Now, when you're trading, the fundamentals are not that important, because you might argue, well, the electricity has obviously gone up quite a bit, which means that these companies should go up in value as well. Maybe in the longer term, but in the shorter term, as we can see, anything can happen. It really moves up and down, and that's what we're trying to catch in the shorter term. So with that being said, that's really the stock news for this week, and those are the two new stocks that we're looking at, and we're locking in a 4% profit, which is awesome. Now, moving on to Bitcoin. What is happening in the crypto market? Well, looking at this, not much. But what I want to share with you is a couple of big pieces of news here. And that is this. BlackRock, they actually announced that they have a global fund of 15 trillion. And look, that's a huge fund, 15 trillion. Do you know how many zeros that are? That's a lot. And just by speculating a bit in this is by no means true that this will happen. And we don't know if they are, but if they were, they have actually allocated $15 billion, so not trillion, but billion is a small portion of their assets to cryptos and buying Bitcoin. So they've actually allocated a small part of this fund to cryptos. And now in a survey done a couple of years ago, they've actually hedge funds or funds said they would maybe allocate 0.5% to cryptos over the next couple of years. So let's play with those numbers. Let's just speculate in this. And if BlackRock would just allocate 0.3% of that fund, that's 0.3%, to cryptos, they would actually be able to buy every single cryptocurrency on the planet Can you imagine? This is one institution. So this year might be one of the last year. If they're doing that, I don't know. But this might be one of the last year where you actually could get into cryptos at a very cheap price. We will see, right? But I thought that was awesome news. Another piece of news here is as well that some of you are probably following the FTX case. And the CEO and founder, SBF, he is pleading not guilty for all the fraud that FTX has done, but he is looking to be facing 115 years in prison. It's good that we're getting rid of these bad actors in the crypto space, so that we can enter a new era of maybe a more sustainable and more regulated place. And next up, I have a really cool crypto that we believe will really go up in value in the next bull market at least, and that is Matic. And looking at Matic, it hasn't really fallen that much, at least not in the shorter term, and it's holding up really well. And they have actually just announced a partnership with MasterCard to launch a new Web3 platform for artists. It's all happening, right? They're building, the infrastructure is being built, and it's allowing us to get in at very good prices. So Matic is a really exciting project to get into. We have gotten into a 73% drop. It's currently, from the high that we got in at, it's down roughly 71%. So if you're not in this, it's such an amazing opportunity to get your average price down. So this is definitely a crypto that we are looking to be buying. If you're new to this, what an amazing opportunity to get in at these prices with a solid strategy. And just a slight warning as well, Gemini, they have not filed for taxes from last year. They should have, but they tried to extend the period usually. Not a really good sign. So make sure, the same with Huobi by the way, they have laid off 20% of their staffs. Key executives have left the company, and it's not really great, right? $60 million worth of tokens has gotten out in one day. Large withdrawals are done by large holders as well, not just retail. So we're not sure what's going to happen, but we are better to play the safe card. So with that being said, let's keep 70% or all of it, as much as you can, of your money off exchanges. Really, really important. And speaking about big players in the industry, DCG, we've spoken about them before as well. They announced closing its wealth management division and laying off its crypto brokerage Genesis. So this is all about Genesis, a really big player in the crypto industry. So there are a lot of things happening in the crypto industry, not all good, not all bad. But one thing I wanted to mention to you is that this could absolutely be one of the best times to be buying cryptos and Bitcoin. Look at this. So in the last bull market, this by the way goes back to the previous bull markets as well. But usually, if we have a look, we have now fallen roughly, let's see if we draw it from the actual high here, there we go. We have fallen down roughly 75. We were down a bit more to 78%. So not far from the 84 that is the average. But more so, next year will become a super cool event. That's the halvening. And the halvening takes place next year in, I think it is April. Let's have a look here. And I think that if you look at the Bitcoin halvening, you can see here, we can actually look at the countdown timer. Let's see, Bitcoin halvening, here we go. There we go, countdown. So it's going to happen in 451 days, and roughly 1 year before the halvening, the bull market usually starts. So then the bull market would just be around the corner, and this is what we firmly believe. For every $3 we are putting in to buying coffee or anything else, it really could be $9. I believe that the market will at least 3x from the current prices, which means that for every $3 you spend, it can become 9 in the not too distant future. Very important. So that is pretty much it for the cryptos. One crypto that we would avoid is Huobi token. That is the HT Huobi token. And for the simple reason that the exchange is looking to be a little bit in trouble here. And as you can see here, the price of Huobi, the Huobi token, has fallen down 88% from its high. It's not very different from other tokens, and this could prove to be one of the better investments, especially if the market does recover. But we do not know that yet, if the market will recover. So currently, we believe that this is a good crypto to be avoiding. We think there's better opportunities out there, such as Bitcoin, such as Ethereum, such as Matic, as we spoke about as well. Also, what I want to just mention as well before we leave the crypto space is that we think it's a prime time to be buying cryptos, as I mentioned. And some other cryptos that are worth looking at is Uniswap. This is a decentralized exchange. It's down 43% from its high. We discussed this the previous week, but it's worth mentioning again because in December we saw the volume of people using and the amount of money being used of decentralized exchanges like Uniswap doubled. But at the same time, the centralized exchanges did not. They actually had the lowest volume in over 2 years. That's another reason why it might be a prime time to be buying cryptos such as Uniswap as well. So with that being said, let's dive into the stocks as well. The stocks has recovered a little bit, as we can see on, for example, PayPal. It has recovered slightly, right? Just a little bit, but not enough, nearly enough for us to take profits. And that's true for all of the stocks here. Now, there are two stocks I want to be looking at. The first one is VVE. This is the World Wrestling Entertainment, which is a huge business. And they actually got their old CEO. He came back, which then drove the market a lot higher. We saw a rise in the market of over 30%. Now, we are not entering here. This is very important. This is the reason I'm showing you this. We're not acting on emotions and entering. What we are doing is utilizing our strategy. So from the high, we need to see a drop of 20% before we enter. So never enter on emotions, never enter at a high, but instead enter at the falling prices. So a 20% drop is what we're waiting for. Now, the one other stock I want to mention is Microsoft. If you're not in this, if you're new to the channel, make sure you check out Microsoft. Why? Because they are an early investor into OpenAI. And in next week Trades of the Week, I'm going to dive into OpenAI a bit more. It's a new system that can really revolutionize the industry of AI and, well, I guess how people do their schoolwork or even work. It's a robot where you can type in what is investing. It will tell you the answer. Scan the internet and tell you the answer. But more on the OpenAI and the chatbot in the next week's Trades of the Week. So next Monday next Tuesday as well. So with that being said, this is one we're looking at because they're an early investor and down 35%. It's such an amazing opportunity to get into Microsoft at these prices. Now, if we look at a stock to buy, that would definitely be Microsoft, especially if you're new. And one stock to avoid is Coinbase. So looking at Coinbase, we were actually in this before, and it could be the best investment opportunity in a lifetime. And I'm actually in this. And so disclaimer there, I'm in this, but I'm saying one to avoid because if I were choosing between entering into Tesla like we talked about last week or entering into Microsoft, I would choose Microsoft and I would choose Tesla over Coinbase at the moment because they're safer investments. But that being said, this is more risky, could maybe go to zero and bankrupt, but they could also go up in price. So there are always those two, always two sides of the coins. So with that being said, let's jump over to the results. So as of today, we have now officially closed in 69.2% on the Buffalo, which is awesome to see. So 4% up, and VCA, CCA and small cap is unchanged. And remember, the results on those are on the money invested, not on the portfolio, but the Buffalo is on the entire portfolio, since that is how we're calculating the risk and reward. So 69% since August 2020, which is quite good, I would say. We're aiming for 30% or 36% a year, so not really up to that target, but this is non-compounded. So money-wise, I think it will be a lot more as well. So with that being said as well, my friends, this is the end of Trades of the Week. This week, I hope you got a good glance and good idea what will happen with the market over the next couple of weeks. And more so, make sure you subscribe to our channel if you enjoy this kind of content, and also like the video and comment below. What would you like to see? So what are you enjoying about this? Is there anything you think we could improve with Trades of the Week? I would love to hear. And also, what are you investing in at the moment? Where are you putting your money? We are putting our money here. We are putting our money where our mouth is. Absolutely. So with that being said, everyone, I cannot wait to see you on next week Trades of the Week. So have an amazing day, lunch, evening, depending where you are in the world. And I'll see you next time.